What's up, everybody? This is Bullish Bear with 23 Capital Trades, coming back from a very long hiatus, about 7 months at this point. Took a lot of time to myself to not really focus on recording videos and getting content out when it was really distracting me from focusing on what we all need to focus on as traders. I'm going to get right into it. We need to focus on the process of learning and developing as traders. And in prop and in futures specifically, or in any asset class, you go through cycles where you have some success, you take a couple steps back, you have a little bit more success, and then you hit a slump, and so on. I've definitely been going through that since these videos have come to fruition, and I needed to take some time to myself to really develop and figure out what my niche was in the market that I wanted to trade. What market really should I have been trading, which is actually micros, MNQ. I will be moving back to NQ as soon as I make some actual progress in the funded accounts that I am happily holding on to at this point. Over the last 7 months, basically, I got to the point where I could pass combines. I could pass them in as little as 2 days. I would hit 50% and I'd hit the next one right away, but that was only in certain parts of the market where things were good. It was on easy mode, basically. You could pretty much follow the simplest part of your strategies and have success for the day and call it a day and move on to the XFA, in this case for Topstep, and you would more or less just end up having like a lull in the market, and you wouldn't be able to trade the same way you did in the combine, and you would lose your combine. I'm sitting here on my YouTube channel just to show you that in the last 7 months I've done absolutely nothing. You can see 7 months here all over the place, and yes, I know you see a lot of other prop firms at this case, but you know, at this point my loyalty is to Topstep. So we're going to move on over to Topstep, and this was the very first combine I ever purchased from Topstep, and I'm happy to say that I did pass my very first combine with Topstep. Got funded, and we basically blew that funded account pretty quickly, I'd like to say. I can just go to the Express funded account right here, and I will tell you 8 days. So we had, I believe, 3 green days of more than $200, and then that was followed by daily loss limit, very timid trading, and then a blown account. So if I'm not going to have like a home run first day in almost any account, and this kind of still stands to this day, or at least recently until I've been able to change that, I always have either a home run first day or a red day or two, trying to make that red day less and less if it's going to be a red day on my first day in the account. But either way, kind of turn that around, and then we get to a point where we see some success and we think that we've kind of got a grip on it, and then the market throws a curveball and you go on tilt, or at least I do. And that's kind of what happened in that first one. There's a whole video series on that. You can see that here in the top right corner. Show you the entire experience of that. I thought it was a great first experience with Topstep. I love the daily loss limit. I love the rules that they have in place. The one rule, don't hit your max loss limit, basically. In a 50K account, that might be pretty easy to do if you're an aggressive trader. You start moving up to the 100K and the 150K for everybody who appreciates a larger drawdown and a larger daily loss limit. That's not as easy to do if you continue to stay risk averse in your strategies. However, in the last 7 months, all these closed accounts, I went through this phase where I would pass these combines, get these accounts, and then just lose them pretty quickly. Just went on tilt almost immediately. Didn't know how to handle the pressure of a funded account, that opportunity to actually earn a payout. I would just go straight to, I don't know, I was just kind of losing it. Anyway, we're kind of working our way through that, and if you watch Topstep TV, or if you pay attention to anybody who's even worth listening to, they'll tell you to size down immensely. Go to micros. That's 1/10 the risk of minis. Well, I finally got behind that, figured it out, investigated what that would be like for me. Well, it turned out that that was perfect for me. Pretty much is going to be for anybody who's struggling with that sort of thing in trading, especially futures, especially prop firms. You have to manage your risk. You have to manage that drawdown. You have to know when to stop for the day, and most importantly, your strategy. You have to understand that building into a position is more important than timing your position. Without going down a rabbit hole and basically taking up too much of the video's time, I do have an XFA that I've kind of been holding on to for the last week or so, and you'll see here this last day kind of blew out all the profits that I had built up for the last 4 days. So started the day, as I said earlier, with a red day, and then a very small red day here, like $49, kind of just left it alone. And then we had 4 green days of 200 or more. And today we had Jackson Hole. It's Friday, August 23rd. Jackson Hole was this morning, and the market just had all kinds of things going on. It was volatile as all get out, and as soon as Fed Chair Powell got on the mic, the market ran up an exceptional amount, basically. And then if you look at a 4-hour candle, it basically just trapped everybody up there and came right back down. Did the same thing to the very opposite side of the candle, almost the same distance. So if you were on the wrong side of that mood, thinking we were going to have a trend day, you either blew your account or you lost a lot of money in your personal account. There were a lot of people panicking there for a short while. So had to kind of get a grip on that. I was trading micros the whole day, not a single mini. Also, not even up to 10 lots in a micro. So 10 micros is 1 mini. I never even got close to that. I think there was maybe a few times where I got to 7 or 8. Those were other high conviction trades. And I did have a lot of green trades today. It's just death by 1,000 paper cuts type of situation. And my personal daily loss limit is less than the daily loss limit for a 50K account. It's going to be 700, I believe. Basically risking my entire earnings on this XFA so far. I had a $703 balance, and I am literally right back at square one. Zero balance. I stopped as soon as I saw my balance was zero. I got on tilt, and that was the first time I've been on tilt in over a week. Been trading combines when I'm not trading this, and even just, I have a full-time job. I'm basically doing work as well. So let's go ahead and take a look at the last 7 months, the process that I went through, the journey that kind of unfolded, and I'll show you exactly how my trading evolved. It went through a lot of peaks and valleys. There was a lot of learning in there, and there was a lot of inchworming. As long as I'm paying attention and journaling, which I've been doing a lot more of, really marking down where I can change my approach when things start to look dark and I'm getting discouraged. So if we look at the express funded accounts that I got through, I was passing a lot of these in 2 days. Market was on easy mode. I was more or less trading minis only, right? So 150K express funded account here. Let's look at the combine for a second. This is going to be a 150K, 100K, and a 50K. All of them were passed in 2 days, a time frame of maybe 10 days, and they were all express funded accounts in the platform for me, and I lost them all in about 4 days or less. Market was just going great while I was trading the combine. Could get 50% rule each day, pass them in 2 days, and then before you know it, I would just go blank and trade like trash. The pressure of the express funded account, when you don't have a real system and the market throws a curveball at you, you go broke. You hit daily loss limits, you trade timidly afterwards because you don't want to do the same thing twice, and then just, you're blowing $149 on an express funded account that you didn't do anything with. And then after that, you do it again and again and again. This was the first one. We went over that earlier. Basically, all of those past combines were 2-day passers. Hit 50% roll every time. So kind of did that for a while, and right after the last few videos that I had put together, I was going through the actual Topstep pre-launch invitation where you get those 5 50K combines for $4.50 each. I got invited to that. I was really happy and appreciative that I got that invite. It was awesome. I've been having those ever since, and I trade them every month. Now, I have not passed but one that currently is still an XFA. So I have 4 other combines that are still getting billed monthly at that rate. And I think early on, the struggle was knowing that I had those combines at such a cheap rate, and I would just trade carelessly, very immaturely, irresponsibly, and I would just blow through them. So for the last 7 cycles, I've been working on not doing that, or at least the last 3, actually, if we're being honest. Ever since June, July, and August, which it's August 23rd, as I mentioned. So the last 3 months, I've really been working on not blowing through combines just because they're cheap, because as a result of that, you go financially on tilt where you start buying combines just to have combines to trade for the month while the other ones are waiting to be rebuilt again the next month. So that's a bad habit. Don't do that. If you are dying to trade that much, just don't. And if you really can't control it, bless you. Because I'll tell you what, that's exactly what happened to me. Got out of control a little bit, not just with Topstep, but we're talking about Topstep today. So here's the combine that I did pass with minis, as a matter of fact, because out of the 5 combines that I had rebuild in August, I did trade one of them aggressively with minis, and that was this one. I think there was maybe a few micros in there. It wasn't much. Most of it was minis. blasted through it. The market had a great run for 2 days, and I was able to take advantage of that run. Passed the account, got right back into an express funded account, which happily is beyond the longest I've ever had an XFA at this point. So we're at 7. Now here's where the issue is. 1, I started out with a red day of over 20% of the drawdown. However, it was less than half of a daily loss limit, so that is progress. Usually I would have gone on tilt by then. I would have just gone straight to the daily loss limit. The next day, kind of similar pattern if you saw the other flow charts there, where the second day is very timid trading. I was only down $49. No big deal, right? All micros, by the way. This is truly all micros. The next day, for the following 4 days, profit of over $200 a day. So we're up to 4 days. One more day in this account would have been making me eligible for a payout. However, Papa Powell hopped up there and threw the market for a spin, washed a lot of people out, including myself. I think today alone, I made more trades than I had made in the last 2 days. Total contracts traded, 832. Total trades, 224, almost double the last 2 days. And the profits, P&L high was $100. P&L low was the entirety of the account balance so far. So I'm right back to zero right now. It's not messing with me too much, honestly. I think we can come right back and just do this again. The trick is to accept red days when they do come. So when we get over to the TopstepX platform here in a minute, I'm going to show you exactly how we're going to mitigate that. Basically, just make sure it never happens again, because there's no possible way that I can let this account just blow up. So if I get this up to 0 and we just keep grinding, the payouts will come. You've got to trust that process, and you can't rush it. The market and the money will come to you if you let it, and you have a good system and you know how to manage your risk. So in the middle of all of that, probably right around May and June, I got to a point where I could trade balls to the wall and more or less just either hit 50% of the profit or hit a daily loss limit. So there's an example right there. It was either 50% or daily loss limit. Some days it was second day daily loss limit and you'd lose the account right away, or it was a jigsaw type of look where it was 50% daily loss limit, 50% daily loss limit. Yeah, there's another one. This one lasted a little bit longer. So it got to the point where even if I hit the daily loss limit and I had another $1,500 day the next day, I was $500 ahead of the prior time that I hit it. So it was just a stair step where this would have put me up to 52,500. Even if I'd have hit the daily loss limit here, the next day would have been right back up to 53,000. So that was kind of my mindset back then. Didn't really care as long as I was able to hit 50% profit. One other example, I believe this one's probably the exact same way. Pretty similar. I mean, it's just up, down, straight down. A lot of this is just irresponsible trading in a 50K account, really one to two, which is why the first thing they do is make you scale in the XFA, 1 or 2 minis at most, until you get above 1,500 and then 2,000, where your balance is at 0 as the max loss limit. So that's enough of this. We're going to go over to the TopstepX platform now, and I'm going to start showing you a little bit about my setup, what the layouts look like, how I look at the market, and where my strategies have changed. Let's take a look. All right, so here we are. We're inside TopstepX. I'm going to go over the layouts first here in the top right corner. So here we've got the layouts. I do set up a few different things on just this main screen. The first one is going to be this full screen view. Got my DOM that I roll around. It's kind of like having your controller in your hand. Put it anywhere on the screen while you're there. You can trade right away. Also have hotkeys, which if you go over to the settings, you can set up your own custom hotkeys, which I have done. So ASD is join bid, join ask, AS, and then D is break even there at the bottom. I also have 7 and 9 for buying the market, selling the offer. 7 and 9 over here, and then the number pads, minus and plus down here to add contracts or subtract contracts. Those are the 6 main ones that I use. So I also have reverse, which is R, close position C, cancel X, and then flatten F. Don't use those too often, but they're there if I need them. Now is a good time to also go over these risk parameters that I was talking about, how I'm going to avoid hitting the daily loss limit that Topstep offers versus just losing more and getting lower and lower in that account balance. Basically, you move over from the hotkeys over to the risk settings here. My brackets, the stop loss and take profit, I'm risking 500, which is more of a combine setting, risking 500 and profiting 1,500, and I move those. Those don't just stay static. I do move those around quite a bit based on the trade plan for the setup and the position, but that's just kind of like a starter. I want to have those on the screen, and they usually show up in a way where I can move them. For this, I'll probably only risk 100 and move that to 1,000. So 10 to 1, and we can definitely move that if needed. Because I always do a started position of just 1 micro. If I go to 2, 3, 4, or 5, that's because the position's really growing in value and conviction on my part. So I will probably just move it to 500 for now. So that's a 5 to 1. That's still really good, and leave it like that. So whenever I do place a trade with 1 micro, $100 is 200 ticks. So you'll see that stop loss 200 ticks below the entry. If you just multiply that by 5, it's 1,000 ticks for $500. So to avoid any more major losses on this account, I have put my personal daily loss limit to $250. And if I hit it, it is going to liquidate and block. No excuses, no exceptions to the rule. I don't even want to put myself in a position where I can change that intraday, because a little secret between you and me, I actually had the loss limit at 500 and I kept moving it up and up and up, and it finally stopped it at 700 and we got there. So that was ultimate full tilt, giving myself more to lose and continuing to lose. So we're leaving it on liquidate to block at 250. I have this at 1,500 on the personal daily profit target, but only liquidate. So once I hit that, it stops, it closes all accounts. I still have the option to go back in if I want, but this section up here will disappear. Every time you hit that, it kind of just disappears under the liquidate option. If you do nothing, it goes away right away. You can set it to liquidate, it'll pop back up, but it'll just disappear again if you get to 1,500 or whatever that profit target is for the day. And if you set liquidate and block, then it will actually cut you off for the day and you no longer can trade. So under the pretenses that you get euphoric and you become greedy because you've made that much for the day, and then you keep trading because all you had it was set to liquidate, you go back into the market and you start making overzealous trades that essentially dwindle those profits down. A really cool feature would be to set like a stop limit on the profits, so it trails your profits. And if you were to like lose 500 or even just 250 of this 1,500 and you get down to 1,250 or 1,000 per the example, then it would liquidate and block you for sure. That would be a sweet feature, Topstep. But that's what I'm going to do. We're going to stick with 250 a day. If I lose that, then I'm done. And that will completely stop me from being able to ever get back into the account until the next day. So we're going to leave that just like that. That gives me approximately 5 days. Approximately 5 days worth of trading where I should be able to turn things around, get back in a grind. Ideally, we're making more than 250 a day, but 250 a day one more time puts me eligible for a payout. But I'm just going to aim for at least 10 to 15 to 20, a whole month trading, getting the grind going, and trying to get over that buffer and giving myself another buffer before I take a payout. So that's the plan with that. Going back to the full screen view. So I have the daily chart that, I'll sometimes do as like a macro view just to see what the year looks like. I've kind of marked out the start of each year since 2021. That's about as far back in the data that I can go. You do see some of 2020, but since the bear market, the bottom of the bear market, 2023 started that rally back into a bull market. 24 is where we are, obviously. So kind of have a low marked. It's an anchored VWAP for the low of 2024 and a all-time high anchored VWAP. So those two kind of mark where the average price in between that would be. I also have a 32-inch curved set in portrait mode, and it's got my top-down type of look to it. And so this top-down layout that I have set up has 4 different time frames. It's got a 4-hour and a 1-hour, which are kind of marked down like the macro levels, as I was saying, basically on the daily and on the 4-hour, where major levels, which I can kind of track for the weeks and months. And then on the hourly, I can kind of see that in a finer look, basically. So we also have on the bottom side of that layout the 15-minute and the 5-minute. So those are where I find my imbalances, and I can see intraday what the market looks like and where I can find my finer levels. If I see some really large wicks, then I know that that is going to be some critical resistance, or if it is broken, we're going to actually see some momentum and follow through. Or we'll see a new wick higher, and then we can see exactly where sellers are going to start taking on new positions higher up. Or to the bottom side, where we see lots of wicks, since this is a bull market ultimately. We are in a downtrend, and we're kind of bouncing out of that since the start of August, but ultimately, I'm still going to be thinking bull market, as we are, if you look at the daily, clearly in an uptrend. So back to the top down for a second. I'll go ahead and spot imbalances on the 15 minute, which are basically a small wick. It can even be to the bottom side too, but this wick of this tiny little doji candle followed by a large green candle or bearish candle on a downslope, followed by maybe another large candle or another doji, doesn't really matter as long as there's a wick below it. So what I'll do, and I have all my preferred little drawing tools, charting tools set to my favorites, so they just hover around with my DOM as well. I have that for both screens just in case I want to make a trade based on what I'm seeing on one screen. I will take I think this is called the parallel channel, but I use it for more than just channels. It's all sorts of things. There is what you would call an imbalance. There's literally no price action other than that large green candle. So we'll go and look. Let's go ahead actually, and I have a preset. If you go to gear for that little channel, go down to positive imbalance. So that turns it into something I would pay attention to if price reverted back down to it. So I'll lock that, and then we'll go over to the 5 minute, where you can see I have some other markings there too. Zoom in nice and tight, get up close, and see on the 5 minute where that actually kind of confirms. I'm looking for as much buying as possible. I don't want to see any red candles. I see a lot of wicks here. If I were to go in on like a minute or a 30-second chart, I'm sure I would see some action here that makes this look a little less promising. So what I would do is kind of alleviate or remove some of that from this, and we would basically go with just that tight little bit there. But now you can see where price has already gone in and essentially covered that up. I mean, even on a 5 minute, if it's wicking through that far, we can go down to maybe here where we can see how it went to the bottom of the imbalance and came right back up. So these imbalances are very tight ranges. Price typically will come back to them. You can call an imbalance a fair value gap. You can call it a single print on a TPO, but price will typically come back and fill that in. And that is part of the main strategy that I trade day to day. So we're going to go back from looking at the top down view that I have as a whole, which is just that screen. Here's a picture of what it looks like on my desk. It's really just one monitor that I have to my right, and I'll have Bookmap to my left of the screen over here. I use a YouTube stream, Think Bookmap, really helpful. The problem with it is it's not real time, it's on a stream, so it's about, depending on the day, anywhere from 2 to 6 seconds delayed. So as I see something happen on my actual chart, I will look to my left to see what it was, as opposed to seeing it in real time on Bookmap and then being able to plan ahead. So it's kind of a slight disadvantage day to day, but I've been doing that for over a year now, and I'm getting used to seeing it on the chart and knowing what to expect on Bookmap, and then following correlating events in the future to understand what to plan for. So ultimately looking for liquidity that's already been sitting there since early mornings or longer than that. Large blocks of liquidity far away from the actual auction. Those typically tend to bring the market closer to them and or spoof or icebergs or growlers. So let's go back to the full screen view and we can get into a little bit more about the layouts. I also, besides the daily that I look at, I will move this all the way down to the tick charts, where every candle is based on a set increment of ticks. Transactions, number of contracts sold before the candle is completed. And that has no bearing on how much time it takes to do that. And you'll notice by 11 a.m. to 1 p.m. that those transaction times start to spread out. It takes longer to fill in those tick charts per candle. So I will stick with on MNQ. So a 2,000 tick chart is equivalent to a 200 tick chart. So technically a 5,000 tick chart is equivalent to a 500 tick chart on NQ. Trading these higher tick values is going to be just like zooming in and looking at maybe a 1 minute. It's almost identical, but it's based on volatility and volume. The levels that a tick chart gives are going to be a little bit more informative than just seeing the same levels perhaps on a 5 minute. Because if you look at the 5 minute, look how much information all the way back to August 14th I can get on one screen, just comfortably zoomed in, seeing a bigger picture at a 5 minute. If I go to a 5K tick chart, I can go back to the 10th because of how much more information is in 5,000 ticks per candle. versus just however many ticks happened in a 5-minute candle, because it's based on time and not by transaction. So I'll stick to tick charts on this screen mostly, and we will go through. And every morning I wake up, and you can see here I actually have a few. For example, this was today. This was Friday, August 13th. So I'm actually going to go in and relabel that. I have a previous London high, and we just go in and change that to, say, August 23rd London high. This is going to be almost the same as August 16th high, except it's now a low, indicating resistance has become support. So another confluence towards a bullish outlook. So now we pay attention to where price is really stopping, and it's going to be the same place that this range was stopping over here. So now we know when price comes down and tests that, unless there's like absolutely a reason for the market to pull back down, which we could go back to the 30-minute and see exactly if that's the case or not. Typically with these channels, you're going to have some respecting of structure inside of the channel. It'll break structure and move to the right, base a little bit. If it's really going to keep going, it'll move to the right and make a new high, in which case where we would then move that channel over to the right and adjust for the top of the channel. As long as there's a new high, I would make that adjustment for the channel. No new high means it stays exactly as it was. So that's unlike the 30-minute or the hourly, where I'll make those channels, and inside of the preset for channels, I'll typically leave the hourly on until I have it set, and then turn it off so I don't see that on my hourly. The only channels that show up on the hourly or higher are going to be large channels like this. So this was from all-time highs early July, where I marked that anchored VWAP that you see there, and that channel was initially only this big. So as price continued to make new lows, I would move it and adjust to make sure that it was touching the tops and the bottoms of this trend down, and then after that it would make a new low again. So as soon as we got to about the start of August, end of July, we had a basing pattern at the top where sellers were really piling in, and we were getting resistance here. So you can see exactly where that would have happened anyway. And we actually just barely got to this little wick down here, this little section of price. Essentially what I did was just moved this until this section of candles in the middle was the midline. You always want to have the candles touching the midline. So that midline indicates the bottom. So, I mean, even with that huge sell-off, Bank of Japan actually raising rates really made the market move lower. That was actually Sunday night from a Friday close, that capitulation. So that kind of spread this channel out to where it was when we started this video. And it's going to stay that way until the market invalidates it. So I'll remove that as soon as we break all-time highs, because it's no longer, I mean, unless we just like boom right back into the trend down, where I would then extend it, and we can then see potential areas where price will ride these levels of the channel back into a lower down slope, and I see that as highly unlikely, especially with the anchor VWAP being above that already. So markets are strong, even in bullish, even in bearish outlooks, short-term bearish outlooks. Elevator down, stairs up. You can even see it, stairway march up there. A little bit of a break this week, but you know, as we continue to get more data and we get through the election, I'm sure we will see new all-time highs. There's one other layout that I enjoy using, and that would be a split screen layout where I have ES over to the right, because there's plenty of confluence between NQ and ES, and even YM and RTY and gold, GC. So sometimes I will switch this over to GC, because there are some great opportunities in gold. I mean, it's $10 a tick, 10 ticks a point. And gold, when it starts trending, it's not like NQ where it's a bunch of wicking all over the place. When gold trends, it moves. It gets to its target and then it bases. So as long as you're on the right side of the trade and you have a good trade plan, you can trade gold, and you're going to make sure you got the right position size for your account size. But ultimately, gold is a great product to learn to trade. Practice it first. Always go over to a practice account before popping in a combine or an express funded account. Get used to the product that you want to trade before you risk real capital on it. Even a combine should be considered real capital. You spent money on that combine. even if you won that combine, it could potentially become real capital. So when I say real capital, just understand, even with these prop firms, I understand that it's sim trading and it's not really hitting the market, but you need to act like it is, because the goal is to get to that point. So back to ES on the side over there. Well, I thought I had two DOMs, but basically this DOM, I can just change it over to the yellow and then it'll say ES. If I move this back to GC, it'll say GC over here, or I can just change it there. So whatever I want to use on either side of this screen, I can change the link color, or I can change what that color is going to show me. We're going to stick to MNQ, which I've been trading on my Express Funded account quite a bit. Also have this account and this account. So a lot of 50Ks. Did have a few 100Ks. I have canceled those. I've decided to focus on trading only micros on only the smallest account Topstep offers for now. That is giving me the best learning experience right now. If I were to go and start trying to trade again on a higher account size, and this isn't always the case, but I believe I would go and fall back into some bad habits right now. So I'm working on staying in this zone and making this more of a practice of my own and turning it into habits. So here I want to go over one last thing before we close this out. It's one other piece of the strategy that I really enjoy. It's part of planning ahead with fib levels. And with these fib levels, what I mean is not the same 168, 50%, and all of that. These fib levels are based on the true Fibonacci numbers. If you were to take 0 plus 1, you get 1. 1 plus 1 would be 2. 2 plus 1 would be 3. 3 plus 2 would be 5, so on and so forth. You get to 5 plus 3, that's 8. 8 plus 5 is 13. 13 plus 8 is 21. So where I've gone with that is all the way up the chain. I start with a 0. 21 and 13 is 34. 34 and 21 is 55. So that's about as close to the middle as we're going to get. And then 55 and 34 is 89, 89 and 55 is 144, so on and so forth, all the way up to an extension of 987. That's about as far as to the upside as I go with that. And then to the downside, where I find my retracements, I'll do the same thing to the downside. So 21, 55, negative 89, negative 144, and all the way down. They get a little darker because they're very unlikely to ever get down to there. But just in case I do have them there. So what you do on a down slope, we can even invert this and just set this up for what would be a bullish setup, is find a strong move up that creates a range, and then you spot your range, right? So let's go ahead and include that first wick. It's a part of the range, and the bottom of that wick is the other part of the range. Anything after that is whatever, because you've already created a range. It's touched. There's the midline, kind of moved up to the top of it, wicked, and then there's the pullback. So with that, let's go ahead and then lock that in place and kind of darken it a little bit, because I want to see only the midline, and then we're going to use this fib. I'm going to use the top and the bottom, right? So basically what we're doing here, and remember, the top is in fibs. When on these platforms, fibs is 100% at the top and 0 at the bottom. My 100% is going to either be with the 144, which is technically not, or the 89, but we're going to treat it that way. So the 89 is going to go to the top there. And then what you're going to look for is when the market tests that 89 and fails the first time and breaks down, you're going to start finding those areas of interest below, which is going to create good buying opportunities. But you need to remember that this is only based on bullish context. If you're doing this when we're already in a reversal, you're probably going to fail at this. So you've got to recognize whether or not we're in momentum, we're in trend, or if you're spotting reversal patterns, maybe don't use this strategy because it's not really going to help you. You're not going to get the outcome that this strategy is meant for. So identify those things first and then start with this. Find your range first, top to bottom. It should be strong bullish range. Find your first pullback. There's your bottom. It will move around a little bit and even break that range, but if it fails, you've confirmed a range. It'll move back below and look, negative 21 and negative 55. Perfect correspondence with this wick, broke through it to the negative 55 fib, stuck around, and also made a new low on the channel above. Bunch of confluence there. This would have been a great entry right there. And don't forget that we're actually on a inverted chart, so let's make that red. So this would have been a great short. Let's go back and look at this as it was. So now that we've got this range, market had a strong move lower, made the range, broke a little bit, faked out sellers for the first time, came up, enticed buyers, and then we sold the heck off for pretty much all of Friday. This was a Friday. I believe there was some data on that day. We can take a look at August 1st. August 1st was a Thursday. However, there was unemployment claims, and that's what those large candles were right at 9 o'clock. Unemployment claims, boom, made the move lower, and then after about noon, because this is a 4 hour. So this is the first 4 hour candle, massive selling all morning, and then we wicked all the way down until Sunday, where we opened back up in a gap and capitulated lower and then made this low all the way almost perfectly to the 377 extension. So you get those extensions right, you figure out your range, and these fibs have been great for finding exits after you get to your targets. Your targets for any entry in the negative fib levels are going to be once you've broken back through the positive fib levels. So first target would have been the 144 extension. This would have been a massive trade had we caught this during this time frame when we were trading. So if we'd have entered 19,717 or somewhere even remotely close to any of this, maybe some confirmation after we broke that 518. So 200 points later, we're getting confirmation. I think you could probably zoom in on a smaller time frame and get this before then. But after that, we had a massively strong sell all the way through to 18,844, where we finally broke down even further past the fake out in the 18,720s. So from any entry in the 19.5s to the 18,720s, over 700 points in a trade. I mean, on NQ, one contract, that is thousands of dollars. That is a huge trade. And this on the 4 hour chart set up just as it was. If you were to go in, let's lock these settings in and make sure that we're seeing this pop up the same way on maybe a 5 minute chart. All right, so there is the 5 minute with the fibs as they were from the 4 hour chart that we looked at. So basically broke down between that 518 level. This was most of pre-market. So that's the morning that we were talking about. This broke up to the 55%. I think Japan session, Asia session opened up and sold down to the 21% fib and started wicking. Then Euro session opened up that morning for August 1st and we moved around a little bit. Then we had our unemployment claims, which was this candle in the middle here. You can see it's got long wicks on both sides. That was a data reaction candle, followed by a little bit of morning selling. Market opened here. We had one last push up to the top of the downtrending channel, where we then sold off for the rest of the first 4 hour candles. So anything in this area, I mean, with risk management applied, you could see if you were to just wait until we got back down to this area, waited for a failure, there wasn't even a retest. So a lot of traders may not have even gotten in, felt like they were chasing, because usually when you break here, this would be the breakdown zone, this whole section right on the fib. The fib is the line. You would typically want to see some sort of breakdown, retest, move lower. That would have been what a lot of traders I know sort of look for. That would have been failure to reclaim that level and then basically make your entry. The trade starts to look like you want it to look, becomes profitable. That's profitable trading. You gotta wait for your confirmation. So who knows, maybe that double bounce followed by one last move, break above this level right here, failure to follow through, not to mention this large downtrending channel that we have. Failure there, that's the most ideal short. I would say that trapped longs, and then strong move lower. I would say all the way to the positive 89. So you break that zero, get back in your range, bounce off the 89, test the 55. The 55 line in this fib setup is almost always where price tests. You can see so many tests and rejections on the 55. It'll break through here and come back up sometimes. This was the first part of that, where it broke out of that range that we had inverted and came back into the range. Then it had its huge pullback, tested the areas of interest above at the negative fibs. You find your entry at those areas. Negative fibs are always the best spots to find an entry, in my opinion, for this strategy. You could be scaling out of your position this whole way down, depending on what you're trading. In my case, I probably would have been adding to this till about the zero and then slowly scaling back out of this until here. And, can't win them all. The market started to chop end of day, and then you saw just the rest of the night. Friday was a total mess, probably lose all the profits you made over here. Sunday we opened up and gapped down and had our capitulation. So that is how this chart came to be. And there was your trading opportunity based off the fib strategy on a 1 to 4 hour chart. All right, folks, I appreciate you coming back and watching this video. It's been a long time, but I am going to try and get back into this. We're just really working on becoming a better trader, staying consistent. Trading XFAs, earning more XFAs, becoming more of a funded trader, and working our way towards consistent payouts. All right, this is Bullish Bear, 23 Capital Trades. Peace out.